Taunts the Fed. In case you missed it, top gold and silver stories for the week ended September 17th, 2016 from Smaulgld. Trump says Fed is very political and Yellen should be ashamed. Mexican sale of Treasury bonds continue. We'll go through the top gold and silver stories for the week ended September 17th, 2016. The top story of the week, I believe, aside from the bombing in New York that just happened last night and the stabbings in the Minnesota Mall, the top story of the week is Donald Trump making some very incendiary statements about the Fed, Janet Yellen, and Obama in two interviews on CNBC, and we'll cover those as we go through the week in review. Top economic stories. Deutsche Bank and Wells Fargo both under fire. The former, Deutsche Bank, excuse me, being asked politely by the U.S. government to pay them $14 billion for mortgage fraud that they supposedly committed prior to the housing crisis. And Wells Fargo, Warren Buffett's favorite, for creating millions of false accounts. Gold and silver closed the week last week down. Gold closed at $13.10, down about $17 or 1.3%. Silver closed the week at $18.75, or down about 1.5%. The gold silver ratio closed at 69.83 to 1. Remember to please subscribe to Smaulgld. You can get your updates. Smaulgld often breaks stories such as the Swiss National Bank holding mining shares, the Norwegian Bank holding mining shares, often weeks before they reach the alternative media and perhaps never reach the mainstream media. So if you want to sign up for Smaulgld updates, click there. Just fill in your email address. That's all you have to do, and you will receive not every post that we put out, but at least the most important ones. And if you want to see everything we put out, just visit the site daily. Okay, here's what we covered during the week. It seems like a long time ago, but September 11th, last Sunday, they had a memorial service down in New York City for 9/11, and Hillary Clinton attended. So did Donald Trump, but Hillary Clinton had a medical episode. You click there, you can see her collapsing. I'm sure you've seen it before, but in case you haven't seen it, the link is there for you. Okay, September 12th, the CMA Group volume trading discount for foreign central banks. Now, this is something that I guess has gone under the radar screen, but COMEX, or the CME Group, which owns COMEX and NYMEX and a few other trading exchanges, offers a trading discount, a volume trading discount for central banks, foreign central banks who wish to participate on their platform. I did a blog post on it. I also did a video you can check out at the Smaulgld YouTube channel. Quite outrageous that they're actually enticing foreign central banks to participate in futures contracts trading, including gold and silver. If you click on the link, you can see the discounts that they offer, how they can join in, and keep in mind that one day perhaps the Fed will have to apply for this discount or lobby the CMA Group for a discount, because the current discount only applies to foreign central banks, and the Fed has yet to participate, at least overtly, in the COMEX market. And if they decide to do a QE that involves buying securities or futures, then they're going to want that discount too. I know you can check that out. Now, okay, let's get into what Trump said. So Trump is on CNBC. He's phoning it in, and he decides that he's going to just rip into the Fed. And he says that Janet Yellen should be ashamed of what she is doing to this country. And immediately the press had a problem with that. They were saying that Donald Trump had shown lack of discipline, that he made a series of wild statements. The Fed has been doing the best they can. They've been desperate to try to raise rates. And really, all Donald Trump had said was that the Fed had been keeping rates low and that they had created a false stock market. I don't know what's so wild about saying that. That's exactly what happened. He also said that the Fed is not even close to being independent, and they want to keep the market up, so Obama goes out and lets the new guy raise rates and see what happens. He was joking, saying the new guy is probably him. He also said Obama wants to go out and play golf the rest of his life and doesn't care what happens after January. Now, perhaps you can say that might be a lack of discipline, but that's not what the press was complaining about. Donald Trump's personal views on what Obama wants to do after his presidency. The main thrust of his point was that the Fed was political. They had kept rates low to boost the market artificially, and that they were very political. And he was criticized for that, at least by a CNBC writer, Ben White, saying that he lacked discipline for making this series of wild statements because, after all, the Fed is desperately trying to do the right thing. It's just, something always happens where they can't raise rates. Well, anyway, Thursday, Donald Trump doubles down and says on CNBC again, the Fed is very political, beyond anything he thought possible. If it comes down to a political decision or the right decision, they'll always go with the political. Now, I don't know what's so outrageous about saying that. If you go through your history of the Fed, there are Fed officials who have said that they are kind of beholden not just to their shareholders, but also to the politicians. The president, I think it was a Fed president under Nixon, made such a statement. And Bernanke recently said something to the effect that he was giving an optimistic view of the economy during 2004, 2005, 2006, mainly because he was a member of the administration and he didn't want to say things were as bad as they were. So in any event, it's no outrageous or wild statement to say that the Fed is political. They know that they exist. They're political appointees. They know that when an administration changes, they may not get reappointed. The Fed itself was created by an act of Congress. So to say that somehow the Fed acts independently, never thinks about politics, that may be ideal, but in the real world, that certainly is not the case. And by the way, Fed Governor Lael Brainard, she is in the Federal Reserve, and she gave a speech. We'll talk about that in a second. But she's donated money to Hillary Clinton's campaign. So how unpolitical is something like that? Fed chatter. Speaking of Ms. Brainard, they trotted her out on Monday after the market crashed last Friday to kind of boost the markets, and she gave a speech. It's not even worth reading her views on the economy and the new normal and the lack of growth, never mentioning the reason we have a lack of growth is we have a lack of savings and investment because we have pushed up asset prices only and not productive capacity due to the Fed's and other central banks' reckless policies where they print money and just keep interest rates at zero or below and expect that to create growth. But in any event, the point of her speech was, hey, let's not move too quickly on rate hikes. Let's use prudence. And that supposedly was enough to calm the markets. And you would have thought, and we'll get to this in a minute, that would have boosted gold and silver and would have crashed the dollar because it looked like, again, hey, well, we wanted to raise rates, but we thought about it. But, it's just not the right time. It's never the right time. But that's not what happened, as we'll see. U.S. Mint sales update. Very interesting. As I had mentioned, I think 2 weeks ago, that I kind of thought that gold would pick up as we headed into the fall and that silver would do okay, but would not go back to the kind of massive sales that it had earlier in the year. And that's kind of what's happening. As you see during those sales updates during the week, the gold sales have been quite robust. The silver sales a little better than the last 2 months. But if you go through them, you'll see how the gold sales are picking up, both the American Gold Eagle and the American Gold Buffalo. They're not ridiculously high numbers, but they're certainly robust and solid numbers coming out of the U.S. Mint for the gold sales. And the silver sales are picking up from the lows of July and August. There's some gold stories in here. Again, I don't go through them all. I really encourage you to go to the website and check out the links. It's not Drudge Report, but it's, in a sense, it's got a lot of links that you don't see on Drudge Report because they're specific to top gold and silver stories, and I don't get to cover them all. Indian gold falls on muted demand, silver remains weak. That has been a story I've been repeating for a while. ever since the spring that even though the gold and silver prices have risen in 2016, that has not been because of Indian demand, Chinese demand. It has been because of Western bank demand, Western investor demand buying ETFs and boosting the price higher on COMEX. Indeed, the Shanghai Gold Exchange withdrawals are down 25%, 30% this year. Indian gold imports are down 77%. There people say, "Oh, but the smuggling is there." You know what? That the smuggling's always been there. The reason Indians aren't and the reason the smuggling's been there the last 3 years is since 2013, there has been a 10% tariff. That does induce smuggling. I understand that. But last year was a record year for gold, despite the 10% in gold imports in India, despite the import tariff. So it's not like there's some hidden demand that's being not not shown because of the smuggling. I'm still looking at the official imports into India, which are significantly down. They were down 77% in August. So the demand for gold and silver is way down in Asia, physical demand, and it is way up on the paper side in the West. And that only goes to show it's still the tail wagging the dog. The paper markets drive the price of gold and silver because, excuse me, the last 2 or 3 years we've seen massive record demand for silver and gold, and the price went down. This year we see a massive decline because the price went up, and yet the price is rising even though demand is down. Economic data, again, nothing good. um, Non-farm, if small business optimism was down. There was this kind of U.S. household income post-record surge in 2015. I don't know what to make of that. Fed resignations. Atlanta Fed president, I think, is Lockhart. He's going to resign. Now, Atlanta Fed president, he's the guy who's been saying that the GDP is going to be 3.5% in 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 the third quarter. No way is that going to happen. So he'll resign probably before those numbers even come out. Actually, he's going to resign next year. So those numbers will be out, and he'll have his own egg on his face before he resigns, but he won't be around much longer. U.S. Mint sales update, you can check through those. Highlight of the week, well, it didn't happen during the week, but the week before, I was on with Dave at the X22 report, giving a interview on the dark side of central bank intervention. The thrust of the interview was about what happens when central banks start to buy more and more equities and gain more and more control over the companies that they buy. If you're interested in checking it out, it's a 48-minute interview, although it has about 37,000 views. So I was very pleased to see that people would actually sit through. Well, I don't know if they've sat through. Maybe they clicked on it once and turned it off, but it looks like from the comments that people did consume that media. Here's an article, Gold, Reuters. Big money players placing bets on esoteric assets, and then like gold, as if gold is some kind of weird thing out of the ordinary, out of the mainstream to buy. I mean, gold used to be recommended as 10% of your portfolio. They've created an environment such that buying gold is something that's ridiculous. And the reason they say people are buying gold and these esoteric assets is because there's no growth left in the normal assets. And I don't know since when an asset like a stock that doesn't make any money, has no PE, is a normal asset, and somehow gold is an esoteric asset. But that's how you see how the media tries to create their own reality and say, gold is some kind of out there esoteric, but yet shares in Tesla, LinkedIn, Zillow, that's normal. You should buy companies that never make money, probably never will make money, but everyone else is buying them and they're on CNBC. Rare coin found at Mount Zion in Jerusalem. You should check that out. Some pictures there. Bank of Japan to make negative interest rates centerpiece of policy. You would think that's the dumbest thing that any central bank would ever even want to say, but that's where we are. That's the new normal that Brainerd is talking about, is where central banks just figure they'll just print money, bring rates to zero, and buy any asset that's not nailed down, and somehow that passes for prudent central banking, and somehow that's going to help the economy. But Citibank did note that the markets are addicted to the central bank backstop. And that's nothing new. That's not just something that happened after 2008. That's been the case since 1987 after the stock market crash when Greenspan and the U.S. decided they can't allow stock markets to go down, and they created the President's Working Group on Financial Markets, which was later dubbed about 10 years later the Plunge Protection Team. That's where we are now. Is markets know that you always buy after you buy the dip. It's another expression that's entered the lexicon. Then August U.S. import prices down 0.2, so that's not good for the Fed. They're interested in gaining inflation. They're losing it there. So why would they think about raising rates? Here's a story we covered a couple of weeks ago, and it seems now it's been picked up by the mainstream media, and we'll see zero hedge later. I noted a correlation, not necessarily a causation, that as Trump became more and more likely to be the nominee, and then once he became the nominee and now more likely to become president, that the Mexicans were dumping their treasury securities. If you click on this link, I did a podcast on this too. You can see that. And also, it's because the Mexican peso is going down, so they're probably selling treasury. So as I say, there's a correlation, not a causation. But still, it's interesting to see the problems Mexico is having, and it's causing them to sell down their treasuries. I did a quick video, and this is by far no means definitive. There's far more points I could have put in it that I did not, and there's other contrary points I could have put in it too. But I did a podcast here about why the gold silver ratio doesn't have to return to 16-1. It's only a couple of minutes long, but there's many reasons, many changes in the circumstances between available silver, above ground silver, available to purchase silver versus gold, and the pricing. But in any event, it was meant to be thought provoking, not in a treatise on the subject. And there's some good comments, so if you check that out, you can add your comments to why you think the gold silver ratio will or will not, or should not go much lower. And I'm not saying it can't go lower. I'm just saying it won't go lower. Well, not that it won't go lower, that it doesn't necessarily have to go lower just based on the amount of gold versus silver that's either in the ground or above the ground. And here's the story here if you want to click on the Indian gold demand down 77%. These are the kind of stories that I like. Holding gold is getting scary as yields rise. Again, the same type of story comes from Bloomberg that somehow, Reuters calls gold esoteric, and holding gold is now frightening. But holding stocks that don't make any money, never have made any money, have market caps 8, 10, 12 billion dollars, that's not scary. That's normal. And you get your esoteric pet rock, and I guess everything is okay. There was a lot of stories, and I got to fill out these links here. Gold toilet, it's in the Guggenheim Museum. You can go use it, actually. Anyway, click there. You can see the pictures. I didn't post the pictures here. Endeavor Silver to buy Mexican exploration properties from Silver Standard. It's interesting. You're seeing, while there's still not a lot of money in the silver mining companies for them to do exploration, they are getting creative and working with each other, selling each other inactive mines, or working together to get some of the mining production up now that the price is up. Initial claims, internet. So here's one where the retail sales came out and they were low. Now remember, retail sales are 70% of the U.S. GDP. So when retail sales are down, you can't expect there to be a good GDP. So they're down 0.3%. And immediately, market watch. The slowdown is not necessarily bad news. Of course it is. If your economy is based on sales and sales are down, then the economy is not doing well. And it's obvious why people aren't buying. They've been buying on credit. They've been buying cars on credit. Eventually, the credit runs out, at least for individuals, not necessarily for central banks. They can always print money, create credit, and then buy new things with the money that they print. But there's a limit to what people can buy. And if incomes aren't rising, people aren't getting the right type of job, they can't spend as much money. But of course, that goes contrary to the narrative we've been hearing about a solid, robust, and strengthening economy. Q3 having 3.5% growth rate, the economy chugging along, in the words of San Francisco Fed President Williams. One of the Fed presidents said we risk overheating. I think that was Rosengren from the Boston Fed. This is ridiculous. The data is going in the exact opposite direction, and these guys are saying the economy is just chugging along and it's solid and robust. Industrial production, here you go, down 0.4%. Expectations to be down 0.2. So industrial production down. Now you would think with this bad industrial production, these poor retail sales, that gold and silver would rise, because that would mean the Fed would not be foolish enough using their criteria to raise rates. So gold does go up, silver does go up, and then for no reason it goes down. Why? Because that's what they need to happen. Forget the numbers. The Fed needs the dollar to be up higher, and they need gold and silver to be down lower, so magically it just happened. All right, so the British pound took a big dump in the middle of the week, and I asked what happened. New vote to leave the Northern Hemisphere? I don't know why that happened. I still don't know why that happened. Here's another central bank stupidity. Swiss National Bank says their currency is too valuable. They will continue negative rates. They do there's a whole release on it. You can click on it. There's a PDF file. The Swiss National Bank effectively says that no matter what they do, people still want the franc. It's the same with the yen. Why would anyone want the Japanese yen when the Bank of Japan buys every last Bank of Japan debt security, and they own not most, but they own 20% of the Nikkei? So these are currencies. The only reason people want them is because all the currencies are fiat. So it's just relative to the other, or they're good to buy because they are cheap. So that creates demand, because if they're cheap, they can buy them and then do a carry trade and go buy shares elsewhere. So that actually makes it an invaluable currency more valuable. The fact that it's worth less makes it worth more. That's the bizarre world we're in now. U.S. Mint sales update, again, you can go through those numbers. You can see the rise in gold, the silver sales not doing as well. I did a podcast on how long have central banks been buying mining shares. And the reason I did that is because most people think, because of all the news stories lately, that this is just because I reported on it, that as of June 30th, that the Swiss National Bank and the Norwegian Central Bank had mining shares, that they just started buying them. They've been reporting on them since at least 2013, and the Swiss National Bank has been buying equities for almost a decade. Anyway, you click on that, you get further information. Now, the CPI, strangely enough, did come out higher. I guess they needed a number that would point to maybe they're going to raise rates in September. But given the bad economic data, the low industrial production, the low retail sales, the non-farm payroll miss last week, the fact that inflation is rising against the backdrop of bad economic data is basically stagflation. You got inflation moving up and people not being able to afford the prices. That's a nasty situation. That stagflation, raising rates, does not fix that problem at all. And the reason that the CPI went up, the consumer price index went up, was rent and healthcare went up. And that's a good thing according to the Fed. Well, now we're getting inflation, so people have to pay more for rent and they have to pay more for healthcare. That's a sign that what? No, it's a sign that rent and healthcare are more expensive and people can't afford to pay it. I don't know why they would pat themselves on the back for that. In fact, they could pat themselves on the back for making rent more expensive, because real estate is more expensive because there are no interest rates. And healthcare, they've got nothing to do with. That's just a function of Obamacare. That's a government policy. It has nothing to do with the Fed. Zero Hedge finally mentioned the story that I had mentioned a few weeks ago. And they even used my words. Mexico crashes to record low as Trump odds surge, which is what I had said, was that as Trump inches closer to the presidency, Mexico was dumping its treasuries. And I also noted correlation was not causation, exactly what Zero Hedge said. So thanks for the hat tip there. Deutsche Bank, we mentioned this, has to pay $14 billion to settle mortgage fraud charges. No big deal. They just pay the money. Actually, they said they're not going to pay the money. So they'll settle. Maybe they'll pay $8 billion. People have been pointing out that the market cap at Deutsche Bank is only $16 billion. But I guess what they miss is if they do pay the fine, their market cap will probably go up. Because their market cap went down when they found out that Deutsche Bank wasn't going to pay the $14 billion. So it seems that as you can just pay your problems away, that makes your stock price go higher. Here's an interesting story. Despite the anti-Russian sentiment, there's still $1 billion US heading to Russia, it says. And Libya, I saw this at the very end of the week. Libya to sell oil to Egypt for Egyptian pounds. I don't know how that'll play out. Of course, that goes against the concept that oil needs to be sold for dollars, not for any other currency. But it looks like Libya is going to sell oil to Egypt for Egyptian pounds. Thanks for listening. Remember to subscribe again to Smaulgld to get stories before others actually cover them. Also, not that this is breaking news, but I do report on the Perth Mint, the U.S. Mint, the Russian Central Bank gold purchases, the Chinese People's Bank of China central bank gold purchases, generally the day that they come out. So you get those updates in your inbox. They're not unique research, but I do keep an archive of those. So if you can also, you can check those out by going to the gold, silver tabs, and so on. Thanks again for listening, and I'll probably be back online in a day or two.